Most investors open a screener and start with the numbers. I don't. Before I look at a single valuation, most of the market is already gone on principle. There are thousands of listed companies. You can't deep dive them all, and you shouldn't try. I need a system that respects two things at once, my values and value. So I built a two-gate filter. Nothing earns a deep valuation until it clears both gates. Gate 1 is ethics. Gate 2 is the financials. And the order matters. Ethics first. If a company fails my ethical screen, I don't care how cheap it is. It's out. No second look. Because what separates an investor from a thief is ethics. Without them, even theft could be called business. You'll hear a lot about ethical investing on this channel. Rule 1. Zero tolerance on prohibited industries. Alcohol, gambling, weapons, interest-based finance, adult content. And I mean zero. Even incidental exposure counts. A great company with one dirty revenue line? Still out. These are my rules. Yours can differ. But values define who we are. And from experience, you can keep your values and still build a fortune. Rule 2. I don't invest in companies headquartered in the United States. It's a deliberate, personal choice, and it removes a large slice of the market in one step. Let me be clear. I have nothing against Americans. In my experience, they're some of the friendliest people you'll meet. My reason is one of conscience. The U.S. government openly funds the Israeli government, ultimately through its taxpayers and corporations, and given what I believe is a genocide against the Palestinians, I'm personally not willing to let my money contribute to it, even indirectly. That's my line, drawn from my own values. You're free to draw yours differently. I'll go deeper on the why in its own video, and if that ever changes, I'd gladly invest there. Rule 3. I exclude companies with operations in Israel or any name flagged on BDS or UN lists. One nuance I'm strict about. Selling to Israel is not the same as operating there. Selling alone doesn't disqualify you. Operations do. Rule 4 goes up the ownership chain. If an active owner holding more than 10% actively supports Israel, that's a knockout too. I don't just screen the business. I screen who controls it. All of this runs against a pre-built exclusion list, around 3,000 names. And when something's genuinely borderline, I don't silently kill it. I flag it, with the evidence attached, so the call stays transparent. Remember, set your own rules, but enforce your values. In coming videos, I'll show exactly how I apply these screens and whether AI can help. Clear the ethics gate, and you reach gate 2, the financials. It runs in 2 stages. First, 7 quick health checks, all pass or fail. Is the business genuinely profitable? Can it cover its short-term bills? Is its debt under control? Is it liquid enough to trade, listed long enough to have a track record, and big enough to matter? And has it turned a profit in at least 4 of the last 5 years? Fail any one, and it's out. Whatever clears, all 7 get scored. And that score leans heavily on value, then profitability, balance sheet strength, growth, quality, and a little on technicals. Cheap alone isn't enough. It has to be cheap and good. I'll break this whole engine down in its own video. For now, just know, nothing here is bought on a hunch. Let me show you what that does to a real industry, semiconductors. I started with 166 listed chip companies. After the ethics gate alone, 89 were gone, more than half the field, and that includes most of the big American chip makers, all excluded simply for being U.S. headquartered. 77 survive to face the numbers. Now the fun part. The 77 survivors get scored on the financials, value, quality, balance sheet strength, growth, and ranked into 3 tiers. Tier 1 is where I focus. In this run, Taiwan dominated the top of the board. Citronics led with a score near 80, followed by Graytech and Global Mixed Mode, with UMC and Rockchip close behind. A shortlist that earned its place, not guessed. What comes out isn't a hunch. It's a ranked, evidence-backed shortlist, built the same way every time. No mood, no hype, no fear of missing out. And these Tier 1 names don't get bought on the spot. They earn a deep valuation. which is exactly where the next video picks up. That's gate 1 and gate 2. That's how I screen. Ethics first, numbers second, emotion never. And one important reminder before you go. Everything I share on this channel is for education only. It is not financial advice, and not a recommendation to buy or sell anything. I'm simply explaining my own framework. Always do your own research, and if you need advice, speak to a licensed professional. Want to see how I value these survivors? Subscribe, and I'll see you in part 2, the valuation engine.